If I were starting my investing journey in 2025, I'd focus on three key principles: long-term strategy, diversification, and adaptability. The financial world is constantly evolving, and with market trends shifting, interest rates fluctuating, and new asset classes emerging, having a well-structured plan is more important than ever. The first step: master the basics and get your foundation right. That means prioritizing an emergency fund before making any investments. The worst thing you can do is invest without a financial safety net, only to be forced to sell at a loss when an unexpected expense arises. Once my emergency fund is in place, I'd focus on low-cost index funds and ETFs as the core of my portfolio. The S&P 500 has historically returned around 7 to 10% annually, and rather than trying to pick individual stocks, I'd opt for a broad-based fund like Vanguard's VU or Fidelity's FXAIX to ensure stable, long-term growth. I'd also consider international ETFs to diversify beyond the U.S. market and capitalize on global opportunities. But 2025 isn't just about traditional investing, it's about new trends and emerging opportunities. With AI and automation reshaping industries, I'd allocate a small percentage of my portfolio toward tech-focused ETFs or individual stocks in AI, cloud computing, and cybersecurity. Additionally, I'd keep an eye on crypto not as my main investment, but as a speculative asset. While the crypto market is volatile, projects with real-world utility could provide long-term value. That means researching blockchain innovations, decentralized finance DeFi, and developments in Bitcoin ETFs, another essential step. Take advantage of tax-efficient accounts like a Roth IRA or 401k. A Roth IRA allows for tax-free withdrawals in retirement, making it a smart choice for long-term investors. If I had access to a 401k with employer matching, I'd contribute enough to get the full match. It's free money and an immediate return on investment. For additional flexibility, I'd open a brokerage account, ensuring I have access to funds without early withdrawal penalties. Finally, I'd stay patient and stick to my strategy. Market downturns happen, but the worst mistake new investors make is panic selling. Instead, I dollar-cost average, consistently investing at regular intervals to smooth out market volatility. Whether the market is up or down, staying consistent is the key to long-term wealth building. If I were starting fresh in 2025, I wouldn't chase quick gains. I'd focus on solid investments, risk management, and a diversified approach. The best time to start investing was yesterday, but the second best time is now.